Hello guys, Kieran here. Today we're going to look at the funded trader program from OneUpTrader. So if you're not familiar with what a funded trader program is, it's a program whereby you can apply to a company and they will provide you with money to trade on their behalf, and you will receive a percentage split of any money you make. There are lots of programs currently running. I have videos on all of the major ones. So you'll be looking at companies like FTMO, the Fivers, TopStep Trader, TopStep FX. Today we're going to look at OneUpTrader. So we're going to have a look at the OneUpTrader program. We're going to have a look at how you can achieve a funded account, what steps you need to go through, what profit targets and drawdowns. And we'll have a look a little bit around the terms and conditions and try and assess if the OneUpTrader program is right for you to trade. So let's jump straight in. So the OneUpTrader program is a one-step evaluation, which is a positive thing. So most of the programs you'll find are two-step evaluations. FTMO, TopStep Trader, TopStep FX, those are two-step evaluations. So with OneUpTrader, we only have to go through one step. So once we achieve this step, we then receive our funded account. So they offer multiple account sizes. And of course, depending on the size of the account that you want to trade, you will pay a larger fee. You can see down here the fees. So let's have a look at the very first one. So on the novice level, it will cost you $95 a month for a $25,000 account. And depending on the size of the account, the profit split will be different. So in each of these tiers, we have a 50% profit split option or an 80% profit split option. And the monthly fees are slightly different. So with the 80% profit split option, you're paying a slightly higher monthly fees. The profit target and the max drawdown are the same. And the amount of money that you can withdraw for free, i.e. without any profit split, is also slightly different. So on a 50% profit split, you can withdraw the first $5,000 with no profit split, and with the 80% profit split, you can withdraw the first $8,000, which is pretty good. Yeah, and the reset fee is $100. If you breach one of your requirements, your risk requirements during your evaluation, you can reset the account back to square one for $100. So that's the novice account. Let's go up and have a look at the top level ones. So for the $250,000 accounts, we have the 50% and the 80% profit split. The profit targets, $15,000 profit target with a max drawdown of $5,000. You get the first $5,000 with no profit split. $100 reset, and this will cost you $500 for the 50% one, or $650 for the 80% profit split one. So what you want to be looking at here when you're assessing what type of program you want to take, first of all, you want to look at what the max drawdown they offer, because this is the most important aspect, because this is where our risk is. And then you want to also look at the ratio between the max drawdown and the profit target. So for example, FTMO, who I consider probably at the moment to be the most competitive program, they offer a 1-to-1 ratio, so you have to make in their top account a 10k profit whilst avoiding a 10k drawdown. You can see the ratio there is 1-to-1. In the case of OneUpTrader, the ratio is pretty high, so it's essentially a 1-to-3 ratio, so you have to make almost 3 times the amount in profit than you do for the drawdown. So that's pretty difficult to do, I would say. You can of course reset the account, so you could potentially trade the account in a fairly risky manner, but again, that puts you at risk of blowing up the account multiple times. So you can probably run through all of these. I won't go through all of the different levels, but just know that as you increase up the levels, your monthly fee increases. and your profit target and max drawdown will increase as well, of course. One thing to, of course, mention is that with OneUpTrader, you'll be trading you will be on a monthly subscription. So if you go over your first month, you will then be liable to pay this amount of money for the second month. So some other trading programs, for example, the Fivers and again FTMO, you will only pay a one-off fee. So no matter how long you trade that account for, you're only paying a one-off fee, so you're not liable for monthly subscriptions. Okay, so that's the account size overview and the key metrics you want to be looking at. So the profit target and the max drawdown, the daily loss limits, the amount of money it's going to cost you to take these programs. Let's have a look at the risk requirements and the guidelines. So we have to trade a minimum of 15 total trading days, consecutive or non-consecutive, to be eligible for placement with our funding partners. Holidays and weekends are not included. So you have to trade, so remember you have a monthly subscription here, so within those 31 days you have to trade 15. Now remember, within those 31 days you're going to have 4 weekends probably in there, so straight away you start to realize that you're going to have to be trading this account very actively. So keep that in mind when you're choosing which trader program you want to choose, because if you don't want to be day trading, for example, you probably want to look at accounts like FTMO, but probably more for long-term swing traders, look at maybe the Fivers. The evaluation period for that one is over 6 months. You can hold your trades through news, and you can even hold your trades over the weekend. So that might be a program you want to look at if you're a more longer-term trader. But let's get back to OneUpTrader. So permitted products you can trade all these products on the CME. So the CME is the Chicago Mercantile Exchange. So these are US futures. You have currencies and the equity index is probably in here. Permitted times, you must close all your positions by 3:15 CST. So you have to close all of your trades every day. So that's something to bear in mind. So again, you have to be kind of day trading if you're using OneUpTrader, I would say. Max position size. So this will scale depending on which account you choose to trade in terms of the account size. So obviously with a higher account size, you'll trade larger lot sizes. So bear that in mind. Your profit target, of course, this is the target you have to reach to be eligible for a funded account. Daily loss limit, you need to stay within this on a daily limit, not on a daily basis. Trading drawdown, so this is a very important metric. So this is the drawdown. You cannot allow your account to draw down below this certain drawdown level. And the key thing here is this is a trailing drawdown. So as you increase your balance into profit, your drawdown will actually increase behind your profit. So you need to bear that in mind when you are assessing which program you want to take, because most of the programs have trailing drawdowns and some of them are quite tight. So you need to assess what level of risk that you have with your trading strategy. If you are liable for big swings up and down, a trailing drawdown is very dangerous, because as you make money and your drawdown moves up behind you, that can easily be hit. So what I can recommend, if you do trade a higher risk strategy with larger swings, FTMO is a good account to trade because they have a fixed drawdown, which doesn't trail your profit, which is good. I have a link, by the way, to the other programs I mentioned during this review in the description below. You can just click those to go directly to each of the programs that I mentioned. In the case of the trailing drawdown for OneUpTrader, the trailing drawdown does stop at your account size. So if you're trading a 100k account and you make 5k a profit and your drawdown moves up behind, it will stop. It will be capped at 100k. So even if you move that account into 110k, 120k, your drawdown will at least be capped at 100k. So it doesn't trail all the way up, which is good. Consistency, you must be able to demonstrate the ability to trade in a consistent and regular trading pattern. Traders must have any 3 trading days net profits total summed up to equal 80% of the largest trading day's net profit. So I think what they're trying to do here is to make sure that you don't trade in a very low risk manner where you're essentially scalping just to hit your risk requirements, and then you have one huge trade which takes you up above the profit target. I think what they want to do here is they want to make sure that you have at least 3 days profits that add up to 80% of your biggest day. So it means they're forcing you to trade in a slightly more risky way, and not just have one huge trade that moves you into profit. Okay, so that's something to bear in mind. So once you hit that profit target and you keep your risk parameters, you will then move into the funded account. So once you have your funded account, one thing I want to mention with OneUpTrader is you can select which trading platform to use. You have a choice of all of these trading platforms. Now, one thing I want to mention, and I think that all of these trading platforms are all paid, so you have to actually pay for your own trading platform. So that's something you have to bear in mind. So there's no MetaTrader 4 available. There's no CTrader, which are free trading platforms which other programs offer. You have to pay for your own trading platform. So that's something that you need to bear in mind if you're thinking about OneUpTrader. The positive side of that, though, is they have some very good trading platforms here. So if you're trading more advanced strategies like market profile, volume profile, you can use Investor RT, Sierra Chart. These are very popular with professional traders. Jigsaw Trading offers excellent order flow analysis and heat maps and things like that. So if you want to trade these more advanced tools, OneUpTrader could be a good option for you. Just remember that you have to pay for those subscriptions to these platforms yourself. OneUpTrader will not cover those costs. Okay, so one other thing which I want to mention about the funded trader account that I noticed when I was looking through the terms and conditions. Let me see if I can find this. So one thing here is additional probationary initial 90 days guidelines may be imposed by the selected funding account company to maintain trade activity and performance standards. So what this means is if you get a funded account and you pass all your evaluation requirements for OneUpTrader, you are still liable for another 90 days probationary period where you might lose that funded trading account if you do not hit specific profit targets, because they specifically mention performance standards. So you have to keep your performance standards up for 90 days to keep your funded account. So they don't advertise this, and this is slightly hidden in their terms and conditions. And I don't really like this because with other funded trader programs, as soon as you pass your evaluation steps and you achieve your funded account, in my opinion, that should be it. You should then that's all you should do. You should just be able to trade that funded account within the risk parameters. There shouldn't be any other hidden timescales like this. So this I find a little bit disappointing, to be honest, for OneUpTrader. If they want to do this and they want to add a probation period of 90 days, fine, but I think they should probably advertise that in the program up front, not have this kind of hidden away here. So this is one thing to bear in mind. Once you have your funded account, you still might lose that funded account if you don't hit their performance standards here. Okay, so that's OneUpTrader. I hope that's been interesting for you to see inside their program. So like I said, this is more for day traders, particularly probably US facing, because you can only trade on the CME. You have to close your positions at the end of every day, so you're going to be opening and closing trades a lot. The funded account, again, they do allow you to keep a large chunk of your profits, 80% in some cases, as long as you pay for that account. However, of course, you have the platform fees which you have to pay for yourself, so you're going to be paying a monthly fee for the platform. If you're trading one of those platforms during your evaluation, you're also going to have to be paying your monthly fees to take your evaluation with OneUpTrader. And of course, like I just mentioned, if you achieve a funded account, you can still lose that account within the first 90 days because of the probation. So bear that in mind. Okay, so check out my other videos, which are reviews on all the other major trading programs that are available. And in the meantime, subscribe to the channel, like the video, comment, and good luck.